Carl, good morning. Thank you so much for joining us here. We have Mark Tritton. He is the CEO of Bed Bath & Beyond. It's his first interview as CEO since taking over in November. Thank you for being here with us exclusively this morning, Mark. You know, when you stepped in, it was a big job to reinvent Bed Bath & Beyond, and then a pandemic hit, making this job all that much harder. Are you still confident that you can turn this company around to see profitable, growing sales again?
Yes, absolutely, Courtney. Great to talk with you again today. I think, very interesting times to take the reins of a company and turn around. But actually, we've seen an acceleration of our potential strengths and opportunities as a result of the COVID moment. We're seeing great recognition of our brand. Truly, home is an important moment for all customers at the moment. And we're seeing growth in the category as well as growth for Bed Bath & Beyond. We have the strength of our balance sheet, and we have a clear pivot to a digital business, which we had programmed, but even more accelerated with the COVID moment. As we've grown in digital and introduced BOPUS and curbside pickup, which didn't even exist prior to COVID, we've seen a great response from our customers. We're seeing some great numbers in June and beyond. So we're highly encouraged by what we see ahead for us.
Yeah, 82% overall digital sales here during this most recent quarter when most of those stores were closed. So it ended up making up 2/3 of the total sales. You mentioned your balance sheet, and part of what you've been doing is sort of evaluating the assets. You've got a lot. Buybuy Baby is owned by you all. Christmas tree shops, Cost Plus World Market, Decorous, just to name a few. Maybe not everyone is aware of that. And Bank of America recently did a study and said almost the entire enterprise value of Bed Bath & Beyond is Buybuy Baby. Are you going to spin that off? How are you going to recognize the value of that brand?
Well, I wouldn't recognize it as the sum total because Bed Bath & Beyond is an incredibly powerful asset. But what we see happening is the strength of our enterprise collected together and really connecting with our guests in their life moments, from baby to college dorm to first apartment to new home, marriage and beyond. So using the strength of our core assets moving forward, we've made a commitment to look at our non-core assets and maybe potentially divest of those, and that's work in progress. But as we see the core body of our assets pulling together as an enterprise and utilizing them for strength, Buybuy Baby is centrally inside of that plan.
Okay, that makes some sense. You announced 200 stores will be closed over the next 2 years. Those are awfully big boxes. Is that going to be enough for you? And then those that are left over, what's your plan with rent? We've been hearing an awful lot of retailers are not current on their rent with the landlords because of what's happened with COVID-19.
Well, let me take the last part first. In terms of rent, we've been working closely with our partners, our landlord partners, to establish how we stay liquid in this really difficult moment. As we're coming back to full store opening, we're regaining regular operations, but we've been negotiating our position. In terms of the 200 stores, they're Bed Bath & Beyond stores. We've taken a very comprehensive look at our EBITDA return on these stores and where we've seen true overlap in terms of demographics and shopping areas. And we see the need to rationalize that fleet. We haven't done anything major before. We're taking one strong movement towards this. And we think that it's going to have a really strong positive impact on our EBITDA going forward on an annualized basis. It's over a 2-year period and also marries to a number of stores that are naturally going through a lease expiry period. So we'll intersect those two things and build a plan to move on those 200 over the 2-year period.
So for the remaining rents, you're still in negotiations with your landlords? Are you not totally current with all those rent payments?
We are in current negotiations and we're continuing those. Again, we're just coming into full opening as of this week. So that's been an ongoing dialogue with our landlords over the COVID period and as at this point as well.
Mark, it's Kayla Tausche in Washington, D.C. Even before the pandemic, the Bed Bath & Beyond coupon was a staple in American mailboxes. And I'm wondering how much you had to ramp up your promotional activity during this period to try to get people who might fear their job security or might want to be saving more of their income to make purchases at Bed Bath & Beyond.
Yeah, thanks, Carla. I mean, we've seen it actually quite the reverse. A large part of our business was in the coupon space was really store reliant. And with those stores closed, no coupon activity. We normally see less of a redemption rate of coupons in our digital business. And as our digital business absolutely soared to over 100% in the April and May period and consistently driving double-digit comps through June and beyond, we've seen that ratio change. We actually scaled back on our promotional activity during the COVID period as we found that people were looking for their wants and needs, and we were still enforcing and utilising the coupon where necessary, but we actually descaled promotions during the period.